Hi, good evening, ladies and gentlemen. Thank you so much for tuning in today and taking some time off your busy Saturday schedule to be participating in our webinar. Today, I actually have Guo Liang from AAA Financial Corporation with us. And this is actually a very interesting session again, because due to technology, I'm in Australia and Guo Liang is in Singapore. So welcome, Guo Liang. Thank you so much for taking your time off to join us today.
Thanks, Ernest.
Yeah.
Hi, good evening, everyone. Sorry, you were saying?
Yeah, actually, ladies and gentlemen, I just wanted to share with you, first thing of all, is that Guo Liang is going to be delving into the presentation because your time is very important. And once his presentation is underway, if you have any questions altogether, there is a button on the bottom right-hand side that you can actually raise a chat questions or raise any questions that you have. I won't interrupt Guo Liang while he's doing the presentations, but I'll definitely raise all the questions that are raised after the presentation is over. So if you have any questions you need clarifications on, or if you've got something a bit more private that you want him to know so that he can address you as well, not a worries, because I believe most of you have my number already. If not, I'll flash my number at the end of this presentation. You can also get in touch with me. And I believe Guo Liang will also share his details as well with you. So you can also reach out to him as well for either personal or private consultation. I'm pretty sure he'd be more than happy to give you a hand. So
thanks, Ernest.
Yeah, without further ado, Guo Liang, welcome. Thank you so much for coming in again. And please tell us a little bit more about AAA Financial Corporation and what you do to help foreign buyers or help buyers per se to secure their mortgage for real estate properties in Australia. The floor is yours.
Okay, thank you. Good evening, everyone. I'm Guo Liang from AAA Financial Corporation. Thanks for joining us today. This is what we will cover today. First is the process of borrowing in Australia, our loan feature, and type of loan we can offer to best suit our customer needs. So before I start, maybe let's have a short introduction of who we are. I'm Guo Liang from AAA Financial Corporation. We are based in Brisbane. I myself actually stationed in Singapore. We established in 1995. We started overseas lending from Australia property since year 2000. Since then, we have written over 7 billion of mortgage and over 2.5 billion drawdown for overseas clients. As you can see, this is a fairly huge amount of loan size. We do have a lot of experience when it comes to helping overseas clients to secure their loans. So hopefully I'll be able to share some knowledge with you guys today. When we come to mortgage loan, there's a few categories we can explore. Purchase of property. This is a common loan we normally see when one customer purchases an apartment and take a loan for it. He will collateral the property to the bank and get a loan out of it, which is pretty common when it comes to mortgage loan. And on completion day, the bank will disperse the loan amount and complete the purchase process. The borrower will then start the loan installment the following month. The second category that we look at is actually construction loan, which we also refer to house and land loan, where a customer purchases a house and land and take a loan out of it. This type of loan normally will be under progressive disbursement. Borrower pay the installment based on the amount disbursed. Example, you took a loan of about 500K and on land completion day, the bank disbursed 200K for the land and there's a remaining 300K for the house building. So the following month, the borrower only paid the installment based on the 200K. This is the disbursement until there is another disbursement, then it will add on to the borrower installment. When the house is fully completed, then you will start to pay a full installment of the 500K that you loaned. So I will touch a little bit more later part of the diagram, with a diagram. We also have refinancing and equity release. Under refinancing, we have a simple program which client existing loan interest rate is higher than our interest rate. Client can choose to refi over at a lower interest rate with a very simple process. Those who are interested can let me know later or I can walk you guys through. Other than this, there's also client which their property prices has increased over the years and wanted to benefit from the price increase. By cashing out the difference, what we can do is to help you refinance the existing loan over, and the difference in price after the outstanding loan amount can be cashed out to you. There's also customer that's already fully paid their property and wanted to cash out to invest in other property, which is also very common too. I believe there's a lot of customer today here which is has fully paid property here. So if you are looking to cash out your existing property to purchase another property to build your own property portfolio, can contact me later on. Loan features. For customer to take loan with us, there's a lot of features that we can offer them. For example, We have a multilingual team that can help cater to different customer needs. We also have internet banking, which most of the loan feature can be operated through a click. The loan itself come with 100% offset account, which means if today you take a loan of 500K, you deposit 300K into your repayment account, which is also your offset account. Technically, the interest charged on you is the remaining 200K instead of the 500K. Digital VOI as opposed to face-to-face. We also use digital video interview at the comfort of your home country, which bank needs to do a short interview during the loan process. Instead of the traditional interview, which you need to fly over to the interviewer location in order to process the loan, you can do it in the comfort of your home. So BPay. We also have BPay, which allow user to pay bills in Australia with a simple click through their internet banking app. The best part is right now we can loan up to 85% LVR and we can go up to 30 years loan. Internal variation to suit client changes circumstances where applicable. We also have internal variation to best suit customer present needs. Example, when you took a loan with us, you were a non-resident in Australia, but after 3 years, you have become a PR. We can bring this up, reassess and change the loan package according to your status, which is a one-stop service for all our clients. Borrowing inside Australia, simple application and onboard process. The borrowing process with us is pretty simple. You do not need to fly over to Australia to apply the loan. All can be done in the comfort of your home country, even when signing off loan contract. First, we will do a simple interview and loan submission to understand the customer profile. After the interview stage and with the requirement of assessment has met, we will be able to provide an conditional approval. With this, if the property is ready for valuation, we will proceed with valuation. Once the valuation is back and all requirements fulfilled, we then proceed to unconditional approval, which is point number 4. Then the contract will be generated, sent to customer to sign and sent back to Australia to await for settlement, which also meaning completion. The process is pretty straightforward and simple. Let's focus a little bit of a construction loan today, as I mentioned earlier. So as you can see, there's an overview of progress of construction loan. For example, today a client purchased a house and land property for $1 million. The land costs about 500,000. The building costs 500,000. The client took a loan of 75% over the 1 million, which is 750K. Inside the loan of amount of 750K, the bank will set aside a full construction cost and use the remaining for land purchase. So what happened is on land settlement day, the remaining 250K after the building cost will be used for land purchase, and the 500K will be kept inside the borrower offset account awaiting for the builder to call for disbursement. Normally, there will be 5 stages of disbursement. Every time the builder sends an invoice, a valuation will be done and make sure that the house is built to stage. Then the bank will disperse the amount accordingly. The repayment will be based on how much the loan is dispersed until the completion of the house where it's ready for occupancy. Then will be the full repayment every month. Okay, with all this, we come to an exciting part. What you see now is the current interest rate we are offering. We have different programs cater for different customer needs. At the end of the day, we will definitely help customers to fit in the best program based on their status. Borrower category. So there's different category to fit different status of customer. For example, all standard, which is Australia standard for customer who are Australian citizen, Australian PR working in Australia. Our traditional aspect and non-traditional aspect are for customers who are Australian citizen, Australian PR working outside of Australia. And last but not least, our non-resident, which is for customers who are non-Australian citizen, non-Australian PR working outside of Australia. So as you can see, we have a few categories that can help customers on their loans itself. So with this, we have a pathway to help customers on their mortgage loan who intend to become an Australian citizen in the future. For example, today when you took a loan with us, you are an overseas investor. After 2 years, you become a PR or citizen, you will be able to review and seek changes on the loan package based on your status. And we hope that the pathway, we will be able to hold our customer hand every step of the way and build a long-term relationship with you guys. With this, I come to the end of my presentation. So this is my email and my mobile. So feel free to ask me any question.
Thank you, Goh Liang. It's actually a very short, concise, and very sweet process that I think you've put together to give it a very, how do I say this, a very easy way to understand.
Thank
But
you.
there's a lot more complexities at the back as well. I'm pretty sure that you guys go through this to help make it as smooth as possible for any of the applicants. Looking at your presentation just now, I just wanted to quickly ask, you mentioned just now that if, for instance, when a person purchases the property and they're foreign residents, that means they're non-PR, non-citizens, and say within 3 years they become a PR or a citizen or PR first, basically, does the rate automatically drop after that, or do you have to redo the loan altogether again to see what the risk factor is?
Well, we highly depend on the status. So basically what happened is, if you look at it, sorry, can I just go back to the slide itself? Okay, if you look at the rates itself, right, the moment if you are a non-resident when you took a loan right now, and if you were to change to a traditional aspect or a non-traditional aspect, right, we are able to review the customer as the customer loan contract, and will be if it's eligible, we will be able to reduce the rate.
Right. So this does not necessarily mean that it automatically will be reduced just because their status is changed. It also depends on their qualifying capabilities, that
Yes,
they actually are probably a better risk for you guys. Is that right?
Yes.
Okay. Goh Liang, I wanted to ask you, is there a difference between engaging the services of a mortgage broker or a mortgage broker come underwriter / lender? I believe that AAA operates on both sides.
Yes, we do. So basically what I normally like to present myself is I'm like, let's say I'm like a painter. So basically my job is, what I do is actually I want to paint as beautiful as I can for the customer to submit to the lender for them for approval. So for us, when you come to us, we will assess the customer profile and everything. So we will try our best to present the best possible way we can for the credit to get approval.
What if the lender is your own company? Then what happens?
We'll be able to mitigate. Meaning, say so, if the application is not doable or in borderline, maybe we'll try our best to ask for exceptional, or we try our best to mitigate the case.
So it sounds to me as though that although you help them try to secure the loans from all other possible lenders here, tier 1, tier 2, or even tier 3 lenders per se, you also have the capability where your own company can also be an underwriter / lender itself. But it again depends on the quality of the borrower to begin with.
Quality of work, yes, but we have more leeways when we submit the customer application.
Can I ask you, what is more important when the customer actually applies? Is it the quality of the asset or the quality of the cash flow from the asset or their own income source to get the loan?
I would say it would be the income source.
Okay. So the income source is the paramount determinant factor in terms of
definitely. The rest of it, I would believe the asset and all this will play a part, but I would say the most important part would be the income source.
If the income source is not from Australia, do you discount it? Do you take it at face value, or how do you assess it?
We do a little bit of discount, but and again, it is not that huge amount that will affect the whole calculation.
Okay. Is there a currency risk that you guys actually look into as well, especially if you are taking from clients? I understand you're actually taking care of Asia Pac per se, so there's Indonesia, Singapore, Malaysia, Thailand, and also Brunei.
Yes.
Do you do any currency preferences or challenge? Is there any currency challenges in terms of valuation for currency exchange?
No. It's one-to-one. So meaning to say, so normally we'll take reference from, let's say, a currency website, example XE currency.
Okay. Can I ask you then, if in terms of the borrower, if the currency is, you say one-to-one, is there a difference in the rates that is when you do the assessment from different countries, or all foreign nationals considered just foreign nationals under one lens only? Or is that
under one lens only? There will not be different tier. Example today, as long as you are outside of Australia, earning outside Australia income, everything will be the same.
Okay. Then if the person is actually a business person, what kind of documents do you usually request, or can you walk me through to the process of, okay, I'm a business owner in, just say, Malaysia, and I want to buy an Australian asset, say in Melbourne. What do I need to do other than, go to the developer, say, yeah, this is what I want to buy, or go to Jalan, yeah, this is what I want to buy. Then I come and look for you. Okay, can you walk me through the process? What do I need to prepare and do next with you?
Okay, for a self-employed, right, who is a business owner, normally we'll request a latest 2 years company tax return, latest 6 months company bank statement, and latest 2 years financial for the company. So normally what they want to look at is the company is profitable, and at the loan perspective, right, we want to know that basically this company will be sustainable over the years, so that customer is able to pay the installment.
Right. Okay. And what if the situation whereby the paymaster is the person with the income, but the asset owner or the name that's on the contract of sale is another person? That means it's like a guaranteed loan, a parent to a child, of husband to a wife per se. Is there any challenges in that sense for AAA?
There will be. Okay, so basically what happened, right? Under the Australian law itself, only the owner can be the borrower. So, but there's always exceptional cases where we have exceptional cases where spouse, we are able to, let's say, today the wife is the contract owner, which is the house owner, but the wife income is not enough to service the loan. So what happens is the husband will be able to come in to help as a co-borrower to service the loan itself, to get a loan approved. But if, let's say today, right, if the contract owner is a wife, for example, again, then the sister of the wife want to come in as a co-borrower, it's not possible. It's only subject to spouse, which is husband and wife.
I see. So parent and child cannot?
Parent and child, no.
Okay, that's interesting. Curiously, personally, I'm actually involved in one particular case whereby the wife is a PR, the husband is not. So in this particular case, if they were to come to you, would there be a challenge then?
There will not be a challenge. It's just that which program should we put? I can't upfront tell you which program we can put in, because at the end of the day, we need to assess the income, whose income is much more to sustain the loan itself. So, but at the end of the day, there's no challenge at all.
Goh Liang, can I ask you, if the company or if a person actually buys it under, say, a family trust setup, because there seems to be a lot of interest to purchase properties under family trusts. If the borrowing coming under family trust, would that be a challenge as well? Or
there will be a challenge. As per now, right, they are only able to do under personal name for us. Okay. So trust itself is still not visible, but hopefully in the near future we'll be able to start this thing.
I guess one of the things that they have to do is to not just speak to the seller of the property, i.e. the developer or the agent. They also need to consult with either the tax person, the lawyer, and also the mortgage broker as well, in this case.
Definitely.
Yeah, because I know that Big Four Australian banks and the Australian rules currently, if you're not a PR or not a citizen, they cannot lend to you. That's the situation right now. Okay. Do foreigners need to buy additional insurance per se for their loans with you?
LMI, is it?
Yes.
As per now, there's not needed for non-resident to borrow to purchase LMI.
Okay, so when you say 85% loan margin LVR, it's 85% towards the property, and not one portion is to pay for additional fees.
No. It's towards the valuation of the property.
Goh Liang, how much cost do you charge people for using your services?
Okay, right now, right, for the fees itself, add up together, I should range between about 2,000 or should be about there.
2,000 Aussie?
I would say sometimes will be lesser than 2,000, because it will highly depend on the LVR that the customer is intending to borrow.
Okay, you're talking about 2,000 Aussie or 2,000 Sing?
Aussie. Everything will be in Aussie.
Everything's in Aussie. Okay. Then if, for instance, a person, say, takes a loan from you for 10 years, just at period X, 10 years,
okay,
and say in 5 years, okay, I want to settle the loan. Would settling early be costlier, or just to ride out the 10 years up with you?
No. Okay, so basically the loan itself has no lock-in period. So, but when you decided to sell the property or decided to fully pay the property, right, there will be a closure of account fee. Right now, it's actually at about $1,005. So, all in all, if you customer were to stop the loan itself, there will be a closure account fee of $1,005. That's all.
Okay. What is the youngest age a person can take a loan with you?
18.
18 now.
Yeah, so, but normally 18 years, as we know, there is no I would say most of them will not have any income. So yeah.
Yeah, actually, this is a follow-up question to what I was asking you earlier, and I think you had answered it. Say a parent and child, so the child will put the asset under the child's name, but the parent pays for it. But I think you answered the question. The answer is no.
No, right.
You
But
guys-
but the contract, if the contract have the child's and parent name, it can be done.
I see. So the parent's name has to be in the contract then for it to be valid, lah.
Yes, you're right.
But just say, for instance, I earn, again, this is hypothetical, and this is a question raised by one of the viewers today.
Okay.
If, for instance, the person earns, say, 15,000 Sing a month,
Okay.
but commitment in Singapore is X,
Okay.
when you calculate the loan eligibility for an asset to be purchased in Australia, do you take the asset commitment cost in Singapore as well?
Yes, we do. So when you submit the loan itself, right, we will look at, you need to submit your credit bureau report, which is Singapore, we call credit bureau report to us. So basically, we'll take your asset and liability into calculation.
Okay, so for Malaysia, it'll be CTOS, the CTOS.
Malaysia is CTOS. Correct.
Okay. And there's another question that was raised here. Is home equity line of credit similar facility available for non-residents?
Sorry, I don't get this.
Yeah, is a home equity line of credit similar facility available to non-residents? Okay, not sure about that question.
Yeah, not sure about this question. Sorry.
Yeah, so what you're trying, I guess what this is about is more in terms of the loan only to purchase a property. It's not like an overdraft. You cannot take the money for the loan to purchase private purchases. It's only for the property, right?
You can, but what we have is cash out. Remember, previously I did mention about cash out. So basically, if you have a property and you there's an increase in price. For example, you fully paid the property already. So as you can cash out the property and do a facility that you need in Australia.
You need it. Okay, hang on. This is interesting because in my mind, when you are telling me this, and I just want to seek your clarification on this. If I had purchased a property that has gone up in value, and this property is say 10 years, it's 10-year loan with you.
Correct.
But the capital appreciation is so much, I can do a cash out whereby I can refinance it with you, theoretically refinance it with you. So I don't settle my loan with you. I refinance it back with you. I use the money to do something else.
Yes.
So the new asset that I purchased is not under a loan. The loan is still on the first asset that I purchased.
The loan is still under the asset. No, if you already have an existing loan with us, right, and there's an increase in price, and you decided to cash out the property, we will need to reassess the whole contract again.
Okay.
So you'll be, if everything is okay and available, so you'll go into a new contract and the old contract will close off.
I see. Okay. So Mr. Chen, I hope that answers your question. It's not a cash out, but cash is an offset, but it's similar to an overdraft. Yeah. So that is possible. Yeah, even for a foreigner as well. Okay. What is the maximum loan period available?
Up to 30 years.
Regardless of age? If the guy is 50 years old?
Up to the credit comfortability.
Does it mean that the person needs to prove that they have an income source up to 80 years old in order to be qualified?
Would be best to have if the applicant will be able to prove that.
Okay. Right.
To give the credit more confident on the 30 years loan.
I see. Is there like a limit to the number of borrowers per loan?
Maximum is up to 4.
Maximum is up to 4. Okay. All right.
But sorry, you're saying?
No, go ahead.
No, that's all. Maximum is up to 4.
Okay. And what you're saying is that it has to be, I wouldn't say the word family related, it'd be husband, wife, and family. Like can say 4 brothers decide to buy it. Or
if 4 brothers decided to buy, 4 brothers is in the contract, 4 brothers can take a loan under one loan.
So as long as the name is in the contract, no problem.
Yes, but what I mentioned just now for husband and wife is in case the wife is in the contract, the husband is not in, then the husband can come in as a co-borrower.
Okay, I understand. And is your loans flexible or fixed?
Right now it's variable.
Is there a way to fix it? Because the rates here
you can fix it. We have fixed rate, but slightly higher than the variable rate.
Okay. I have another question that was raised here is that if they want to use a certain valuer, how can that happen? Because the loan value will be depend on the valuation. So if they want only a certain valuer to be used, how can that be organized with AAA?
We can try. As long as the valuer is under our panel, you let us know. We can try to see if we are able to use the valuer that you wanted. Okay. But you must take note, it must be as long as under our panel.
Are you facing, can you give some feedback with regard to some of the operations that you guys have been doing, or some of the loans you've been doing for Australian-based properties, or particularly in Melbourne? Is there any challenges with valuation that you've seen?
Valuation itself, normally we come back, we can see around maybe about 10%, 10% below purchase price. Should be around there. We do have cases where, we also have cases which meet purchase price, but averagely we'll see maybe about 10% below purchase price.
Okay, so basically it also means that if you want to purchase it, you need to have some cash buffer as well. You cannot be maximizing, hoping for the maximum value to get the maximum loan. You need to have some cash buffer as well. In your experience, how much cash should a buyer actually have in hand before they consider buying?
I would say you cater yourself, maybe about 30 to 40% of the purchase price should relatively be very safe.
Okay. One question that was raised here is that, would the credit card limit, that means they don't have an outstanding, would the credit card limit affect the loan that they can borrow through AAA?
Okay, in a way it will. So basically what happens, if you don't have any outstanding, right, what you can do for us, you can send us the latest credit card statement to prove that there is no usage or minimum usage on the credit card, so that we can try to minimize the calculation from the credit card.
Okay, so basically they can, but they just need to prove to you that they have no outstanding. It's just the limit that's given by the bank only.
Yes.
Okay. How many properties can one borrow to finance?
Yeah, yes. I would say maximum exposure, if I remember correctly, right now should be about 3 million. This one, can I get back to you, because I forgot the numbers already, but it should be about 3 to 5 million.
So I guess it also depends on the quality of the asset and the quality of the borrower. I think that's the safe way to answer, but more specifically, you get back in touch with the person who raised the question. So yes, we will get the answer back to you for the person who raised it, because you sent in the message to me in private. There's another one here that says that, what is the process of refinancing a current Australian property that is currently under a local bank's loan? This was before they say you cannot lend to non-residents. So now, now they don't accept new loans from non-residents, but if they want to refinance it through you, what do they need to do?
Okay, so basically it will be submit as a new loan. So we did a lot of refinancing from the local banks itself. It's pretty common for us. It's a day-to-day bread and butter. So what happened is, if today you decided to refi from, let's say you're existing from the big four banks and decided to come over to us, we will require your normal income documents and all this to make a proper submission.
Okay, so I guess, for all those viewing here today, if you actually want to have the list of documents that you need to prepare beforehand, do get in touch with either Aoyong or myself, and then what we will do is basically to package that together and send it to you in one document, so that at least you have it with you. It makes it easier. And of course, calling Goh Liang to actually ask him, whether this is worth my time or not. This is something definitely I think you should be doing if you're really serious about refinancing or even buying a property. Can I also ask you another question, Goh Liang? With regard to these loans, right? Do you finance New Zealand properties as well?
No, currently we don't finance New Zealand property, but hopefully in the near future we can.
So only in Australia. Is there any, all of Australia, or just certain parts of Australia you finance?
All of Australia.
Is it for all types of homes, or just you can just do land and don't build anything yet?
No. If the house and land, right, we need to come with a building contract. Then we can finance the house and land, the construction loan.
Okay, great. Well, ladies and gentlemen, I think we've really shot a lot of questions to Goh Liang in very rapid succession. We're very happy for him to actually share his expertise with us. If you have any questions, please reach out to Goh Liang or myself. And what I would love to do is actually to come back to you guys with info packs that would be something useful to you. And if you have any questions that you think of later, you can also get in touch with Goh Liang. We work very closely with them. Jalen Realty has been in Australia for years. We're very focused in Victoria, in Queensland. We're very focused in actually the city of Melbourne. So if you have any interest in picking up one property or several properties, or even start building your asset base over here, let us know. We are not promoting any one particular property, because a lot of them are actually quite good. It all depends on your needs. And ultimately, it also depends on what you're going to use them for in terms of your exit strategy. And right now, until June 30th, there's a lot of developers that are actually offering a lot of stamp duty waivers that could actually save you quite a bundle if you actually were to pick up the properties between now and June 30th this year. So do get in touch with us. We have offices in Indonesia, Singapore, Malaysia, Australia, Hong Kong, and in China. And we'd be more than happy to show you what we have, and also to connect you with partners such as AAA, who's also now based in Singapore, and they take care of Malaysia. I understand from Goh Liang that the office in Malaysia is also operating in KL. You can always reach out to them as well, but Goh Liang's going to be the head that you need to reach out with. So with that, ladies and gentlemen, thank you so much for tuning in today. Short, sweet, simple, giving you the information that you need to help you make better financial decisions in terms of your real estate purchases in Australia. Thank you again.
Thank you.
Bye, Goh Liang.
Thanks, bye.